Welcome to the Johnson family. Today we're going to talk about having liabilities or assets and the difference between being in debt and being rich.
A lot of people do not know they accumulate mostly liabilities throughout their lifetime. They go through life believing that most of their liabilities are assets, and they are very confused when you try to explain to them that their liabilities are not assets. Liabilities are things that cost you money. It takes money out of your pocket. If you have to pay monthly to enjoy something, most likely it's a liability. Cars that have monthly payments are liabilities. They take money out of your pocket every month. It does not matter if you own it or lease it. If you have a car payment and it's taking money out of your pocket, it is a debt, also known as a liability. Not only is it a liability, you are paying interest on top of the cost of the car. So it's taking even more money out of your pocket. Once you have stopped paying for the car, it is no longer a liability. Leasing a car is a consistent liability which the car company loves. Once you have finished paying for your lease, you have to make a decision if you want to get into a new lease. The car companies try their best to entice you to get into a new lease, which ensures constant income for the car companies. Or you have to buy a new car and that puts you into another car payment for 5 more years. Now, if your car is making you money like you use it for Uber or Lyft, then it is no longer a liability. It has now become an asset. Assets are things that put money into your pocket. In other words, it makes you money and you can use the money you make to pay for your car payments and insurance. And if you have money left over, then that is an asset. If your car is used for your business, you can write off the car payment, mileage, gas, tolls, and repairs and maintenance as all a business expense. This makes your car an asset, especially if you are making money with your business and using the car for business. See the difference? Buying or leasing a car for your personal use is a liability because it takes money out of your pocket and does not make you money. In other words, it costs you money to enjoy the privilege of having a car. That is a liability. Now, this same car can become an asset if you buy or lease this car for your business. Business. I don't have a business. If you watch our previous video, we talk about starting a home-based business and how it is essential because you will save money on the income taxes you pay during the year. And it is quite possible you would not pay any taxes and get a full refund for the amount of money you paid in taxes throughout the year. You see how you can buy or lease that same car and turn it into an asset and get more money back just for using it in your business? Even if your business is not profitable, you can still write off your car on your income taxes as a business expense. Another liability is your home. Most people will argue that their home is an asset and not a liability. This is what the banking industry brainwashes the public by letting them think that their home is an asset. Remember what an asset is. It is something that makes you money, whereby putting money into your pocket. An asset gives you positive cash flow, which is money that flows to you on a regular basis. Your house has a mortgage, which costs you money every month. It also comes with property taxes and insurance. How is it an asset when you have to pay money out of your pocket every month to keep a roof over your head? Now it's time for a little role playing.
Hey, I just bought a house for myself and my family.
Oh, so you just purchased a liability.
No, I purchased an asset.
How is that now an asset?
It is an asset because the property will increase in value over the years.
That's correct. But now it is a liability because it costs you money. You're paying out of your pocket mortgage, taxes, and insurance with no immediate return on your investment.
Now, all this time I was thinking my house was an asset, but it was really a liability.
Most people think this way. It is why you need to know the difference between an asset and a liability. Role played over. Please like and subscribe to our channel.
You can make it an asset when you rent it and have your tenants pay for your expenses, or you can use part of your home as a business and write off all the bills that are associated with maintaining your home for business purposes. The rich buy assets that keep money flowing into their pockets. The poor and middle class buy liabilities that keeps money draining from out of their pockets. Most people invest their money into looking good, feeling good, and appear to be doing good, which is good for the present moment, but it does little to nothing in building future wealth. In a nice car, nice clothes, and living in a nice house all costs money. Now let's take a look at a simple breakdown. You work at a 9-to-5, your annual salary is $50,000 a year. Your taxes and the money coming out of your salary, with one exemption for federal, state, Social Security, Medicare, and retirement, is $18,750, leaving you with $31,200 take-home pay. Now, out of that, you pay $550 a month for car payments and auto insurance, totaling annually $6,600, leaving you with $24,600. Now, out of that, you pay a mortgage of $1,200 a month, totally annually $14,400, leaving you with $10,200. Now, out of that, you pay a cell phone bill of $50 a month, totally annually $600, leaving you with $9,600. Now, out of that, you pay your electricity and gas, $250 a month, totally annually $3,000, leaving you with $6,600. You now have about $550 a month to pay all of your other expenses. Doesn't sound like very much to live on, does it? This is why we teach financial literacy. If you business while working a 9-to-5, you will be able to get most of your money back, and maybe all of your money back, or better yet, even a refund during tax time. As I mentioned before, we did a video about how to start a home-based business and save on your taxes. Please refer to that video for more information. You can start a home-based business doing almost anything. You can sell brown paper bags to shoppers. You might say that this is not a business and how can I make money? Well, in New York City, we have to purchase a brown paper bag for 5 cents each at the supermarket in order to carry out items. So this might be a business if someone sells the bags for less. The point is, once you have established a business, you can now deduct your home, car, utilities, and your cell phone, plus a lot more. You will have more deductions and pay less taxes. Just like the rich, they have all these write-offs and pay little or no taxes. It is best to buy assets with the extra money, things that will bring you money. You can invest in stock market, buy property, vacant lots. You can also invest in someone else's business. You can buy gold, silver, collect viable coins. The list is endless. Do the research out what assets will work for you and then invest. The rich collect assets, whereby collecting money, assets give them residual income, cash flow. Money keeps coming and coming and coming, even in their sleep. They are investing their money, their time, and small amount of work to accumulate this constant cash flow of money. The rich get paid while they are golfing, swimming with the dolphins on vacation. Why is that? They buy more assets and less liability. The liabilities that they buy, the assets pay for it. Rather be in debt or rich. Magic formula for building wealth. The choice is yours.
Please like and subscribe to the Johnson Family channel.